Welcome back to the Brooklyn Property Market Update, brought to you every week by Engel & Volker's Brownstone, Brooklyn. My name is Katrina Carney, and on the screen you will see Donald Brennan. How are you, Donald?
Katrina, how are you today?
Great, lovely day. Couldn't be nicer.
Beautiful.
So let's go straight into that data across the 16 key markets in Brooklyn that we track for properties above 240 million, the luxury market, and properties below 240 million. There's been a lot of activity this past week in the condo market, as you know, Donald. And distinguishing between the sponsor sales of condo apartments, which of course are when a new building goes up and they've never been occupied before, they're being sold by a sponsor, versus the resale market where there is someone living in the apartment who has purchased it prior to that, maybe a second or a third sale, which we call the resale market. So if we look at the resales versus sponsor sales in terms of our weekly market data for new to market and in contract and all the relevant facts, which one's faring better right now?
So right now, looking at last week's data, sponsor expectations are running ahead of resale owners' expectations for sure. Average asking price in the new to market for sponsors, $1,834 last week versus $1,774 for the resales. And then in contract activity kind of reflecting and those sponsors meeting those expectations by the average there on a dollar per square foot basis of just under $1,700 for sponsors versus $1,340 for resales. The median prices for both of those sponsors being able to achieve 2.97 million for the in contract deals and resales at 2.67 million. So while the square foot number sometimes does get impacted by size of unit, most units delivered today on average are smaller than previous iterations of development product out there. And the resales could be anything from 2 years ago to 20 years ago. So, you know, those dollar per square foot numbers do get driven up a little, but in this case, the median price is for the sponsor exceeding the resales. Below the 2.25, new to market sponsors, $1,300 a square foot versus $1,250 for the resales. And the median pricing there for sponsors of 1.48 million versus 1.14 for resales. In contract, dollar per square foot for sponsors, $1,286 versus the $1,275 for resales. So tighter margin there, but still sponsors outperforming on the resales venues. The median pricing there is 1.377 million for the sponsors and 1.22 million for the resales.
So for our viewers out there who are looking at the condo market quite seriously and thinking about purchasing perhaps a sponsor unit versus a resale unit, have you got any tips for these people in terms of what they should be thinking about in terms of acquiring a brand new unit versus resale?
Certainly. So newer product, who doesn't like new, right? When you go into something new, it's all shiny, clean, and usually very clear to make the distinction versus what a resale product is, which may have a little wear and tear on it. Speaking of that, you know, first thing we always kind of want to stress with our clients is you have to go look at the product yourself. We're happy to go in advance, preview, make an assessment, circle back, share that information with you. But you want to be able to go in there yourself and touch and turn and you know, see how the materials feel underneath your hand, floor feels underneath your foot, views and so forth. It's those things, those tangible things that you need to experience yourself, of course. And there's a different range of quality and choices of materials, fixtures, appliances. So you need to really experience it as much as possible. Wide range of properties out there, big towers, smaller mid-sized projects, you know, and then the underpinning there for me always is obviously location, where, you know, very hard to change location value add to any particular property. Neighborhoods do kind of evolve over time here in Brooklyn. Some may have been on the fringe originally. Now they're a little more mainstream and popular and have supportive amenities like retail and so forth. Some other well-established prime neighborhood may have had, but not as likely. So you always want to, you know, make sure that the real estate is supporting the pricing, and, you know, do some due diligence online. You can do anything online these days. You can go a little bit deeper there and figure out who may have built something, what's their track record, do they have a track record? We have a tremendous wealth of knowledge here regarding who builds what and what quality that product is, and happy to share that with anybody who's in the market for either condominium or even townhouses, both on new development and sponsor units.
So every week we always look for something that interests us, piques our interest, and I'm sure a lot of our viewers and listeners have seen articles about the bubble, the proverbial property market bubble, more referenced across the entire United States perhaps than here in Brooklyn. But let's talk about that and hear your thoughts, Donald, about how you feel that the term property market bubble applies right now to what's happening here in Brooklyn.
Yeah, so I've heard it quite a bit over the previous few months, actually. And one thing comes to mind immediately for me about what I see right now in the marketplace, and kind of specifically in townhouses. Condos are certainly drawing a lot of attention as well. That it's very reminiscent to me of post-global financial crisis, late 2010, 2011, 2012, when there's a pretty kind of steep run-up in pricing, expectations on the sell side, buyers meeting those expectations for a couple of years there, and then kind of just hitting pause. Not that there was a collapse of anything there, not the underlying fundamentals were wrong. It was just people taking a breath because, you know, it's hard to walk uphill that steep day after day after day. So that is what I see right now at the early stages of that. I don't see underpinnings of fundamentals at the moment that would point to something bubble-like, which does, in my mind, my definition of the bubble is that there is a healthy participation of speculators in the marketplace. And while there's always speculators in the marketplace in Brooklyn, both on building condo towers, rental buildings, and even townhouses, those townhouses are usually speculators. Opportunity is from the estate condition home that they may have gotten their hands on in some off-market way, and making improvements and flipping that back to the market in kind of a normal environment. There's normal appreciation. But that is the minority of assets on the market at any given time here, and certainly the case right now. You know, you're out there every weekend, I'm out there every weekend, everybody in our shop is out there every weekend working for the buyers. And, you know, if you're not there, if you're not seeing what's happening on the ground, you could get carried away. But what I see is people, families, couples, you know, looking at buying a home to live in for some period of time. I do not identify any of those people as people I would categorize as speculators. And, you know, you're committing to a home of a townhouse, you're probably thinking, you know, five years, 7 years, 10 years, maybe even longer, but not looking for flipping a property. So that to me is kind of how I view it of, yes, steep rise in expectations on the sell side. Buyers are meeting that. And from being out there, watching what's happening, standing outside those houses, going through them, the lines of people at every house are substantial. So I don't see this product being absorbed anytime soon if that pool of participants stays the same size that it is. And if it grows, it's going to be a little trickier to be on the buy side.
Definitely. Okay, that's it from us this week. Check back in next week, of course, for more accurate and informed observations on the Brooklyn property market. Thank you, Donald, and I'll see you next week.
Have a good one. Take care.
Bye.